In a major warning for property investors, the pace of rental growth is nosediving. In Sydney alone, rents are now moving backwards. This story and this change is so dramatic, it will be a matter of months before the same holds true in other capital cities. This is a major evolving change in the landscape for property investors. Rents have been the glue to rising property prices, and that is about to reverse with the influx of property investors chasing these increasing rents. In this video, I'm going to go through why rents have been so important to the housing story over the last few years. I'm going to go through state by state and show you which areas are still doing okay on rental growth versus areas that are moving backwards. Every single state analyzed. I'm going to go through why rents are falling. 5 reasons why that CoreLogic have provided, and unpack that by showing you a few charts and a few of the evolving changes in the property landscape. And finally, I'm going to talk about what this all means for the year ahead. If you're interested in property investing and the economy in general, this video is for you. Hi, I'm Reedham Syed, founder of Confidence Finance, 6 times top 100 mortgage broker, and I help people grow, build, and scale their property portfolio. So let's get into it. Why are rents so important? When rents go up, the income behind the housing asset that you're actually purchasing is rising too. Now, when interest rates go up, the expenses are rising. Now, if rents go up and the expenses are rising, that's okay for you because you have your top line income figure rising and your bottom line expenses rising and your net figure remaining largely the same. Now, interest rates have risen more than rents, but that increase in rental income has been a key reason why property values have held really well and are even past their peak in just about every single capital city today, despite the cash rate being 4.35% today versus 0.1% just a few years ago. It's crazy, mind-boggling, the fact that property prices are at their peaks with this interest rate. The number one reason behind that is the rental price inflation that's occurred, up 40%. 40% inside the last few years. If you're a renter, you must be feeling the pinch. That sucks. 40%. That is so crazy. And it has created such a housing crisis. It's created all this political attention because this level of rental inflation is simply unsustainable for the livelihoods of Australians. But it has been the underlying reason why property prices have held steady and are back at their peak levels today in this cash rate environment. So here you have the trend in rental inflation over time. You can see a big sharp deceleration in the pace of rental growth. You've got the month-on-month breakdown. Sydney down 0.1%, very, very marginal, but down nonetheless. Melbourne a little bit up, 0.3%. Brisbane down on rents. Brisbane have rents moving backwards now? That's crazy. That's the complete opposite of where it was not too long ago. Adelaide still rolling at 0.6%. Such a housing crisis there. If we think it's bad here, over there, there's just simply not enough homes and they're still fighting over it. And that's creating really strong rental pressures. Perth coming down quite dramatically, 0.3% for rental inflation. That's much, much lower than what it has been in the past. Hobart down 0.3% and Darwin and Canberra not moving month on month. So that's the month-on-month changes. And when you look at a chart of every single capital and look at the change in direction of rents, it's pretty uniform. Sydney, nosediving. Melbourne, nosediving. Brisbane, nosediving a lot. Adelaide, even though they've got really strong rental inflation at the moment, nosediving. Perth, coming down a fair bit. It's probably just the first month, so we don't have that much data on Perth at the moment other than this one monthly change coming down a lot. If it happens next month and the month after that, then you do have that trend that you'll see. Hobart, Darwin, ACT, the smaller capitals all have the same story with rental inflation coming in pretty much negative or at zero as well. So you have a complete change. Rents was such a dominant story over the last few years, and the future lead indicators have been saying it for a little while. We've done a couple of videos on this, that rents will start coming down. But now it is in the actual rental prices that you see, and soon enough, it will be in the RBA's data metrics too, and that could change that pivot that we talked about, a pivot in interest rates associated with rents coming down so quickly, a bit faster than expected. This rent story is so crazy. It's because this is the lead data and the actual data on rents today. But Michelle Bullock, the RBA governor, just delivered a speech. While this data is available to her and she would have seen it, she just delivered a speech and said these exact words a matter of a week ago.
Key drivers of elevated inflation at the moment are housing costs.
And she points to a chart of rental inflation that's occurring at the moment. This is a little bit crazy because we're just telling a story right now using CoreLogic data backed up by SQM research showing asking rents coming back down, showing you live data saying the exact opposite. Rents are now coming down. In fact, in Sydney, they're negative. They're not adding to inflation. They could soon be taking away from inflation. Let's not even talk about the RBA's band. It could be zero. The number one contributor of CPI could be zero, or could even move into disinflation in the months ahead. Now, what she's referencing here is it takes time for this to start feeding through into the CPI data that she uses. But wouldn't it make sense to just think about, hey, what's actually happening in rents? Where is the economy at today? Not looking at this backward data of rental inflation from 6 months ago. It's nosediving. Yes, it was really, really high, but we see the nosedive. It is in the data now. It is real. Makes sense to start looking at this when making assessments about where interest rates need to be, because rents make up a big driver of inflation itself. Now let's unpack the 5 reasons why, based on CoreLogic analysis, why rents are coming back down quickly. The most obvious reason is affordability. We're using up more and more of our income to pay for rent, and now it's reached a level at its peak. 32% of our income is going towards rent, past the sustainable level and very much into the stress level territory. That's why rents in Sydney, where they are the most expensive, are coming back down. Affordability is just too tough at the moment. One other metric to look at here is wage growth versus rent growth. And this is a disaster. That's the only way to describe this chart. It is a disaster. Someone should face serious consequences for this result. Wages barely moving up at all and rents shooting up. We have to remember, those that are the most vulnerable in the Australian community are typically renters. They do not own their own homes or are less likely to versus other Australians. Their wages are not rising, but their rental price is dramatically increasing. This is a big, big problem. It is a disaster outcome, and that change is now going to start kicking in because rents have stopped going up so much. But this wage versus rent equation, look how it's been over the past. But in recent years, there's just been this divide, and that is really the cost of living crisis summed up in one chart. This has it right here. Affordability is the number one reason why rents are going to start coming back down, and where they are at the moment, the situation with rents coming down, affordability is the main reason. The second reason is this really, really interesting one, and the RBA have talked about this before as well, household structures. Now, when COVID hit our shores, one crazy thing happened. We all realized who we lived with. Nah, we don't want to live with them anymore. I don't want to live with you. I'd rather live by myself. My best mate, Curtis, who does the podcast with me, he did this. He was like, holy crap, I can't be share housing anymore. I got to go find a house for myself. The household formation came down. You had more and more people during that COVID little period changing the way that they live, and there was a restructuring that occurred. This is a structural change. It's usually very constant and doesn't evolve all that much, but look at this nosediving in capital cities in the number of people who live in a single home. What happened was we had about 2.6, 2.7 people live per household, per home, and that came down to 2.4. Now, it doesn't sound like much, but if you cut that many people out of each home, it means we need more homes dramatically, really, really quickly, that we simply cannot do. That structural adjustment was there during COVID. But now affordability's become a big issue. We're reversing that, being like, I can't afford my rent. Can I go live with you, please? Let's share a house. Come on, you can live in my bedroom. You can live in the balcony. You see that sort of crazy stuff happening around at the moment. Go on Gumtree and look up rents and you'll see some nasty stories out there. That household formation change is changing, and it's adding in effectively more homes available to rent because more and more people are congregating in the same house. You've got the reversal of what happened during COVID that is now being picked up in the data. third reason that you have here is net overseas migration. It's been a huge topic point for politicians all across the country over the last year. Migration levels are coming back down. They're still crazy high, but they are coming back down. And the peak rental inflation also correlated with the peak overseas migration. You'd expect that. Lots and lots of people coming in at exactly the same time, need a home to stay in. Now, there's still lots of people, but fewer people, so a little bit less competition in the rental market. In fact, I've got a little anecdote of this at the moment. I'm renting out 2 side-by-side homes, identical floor plans, identically located side-by-side. I'd call them absolutely equal. A few months ago, we rented one out for about $850 per week. We just rented the other side. We asked for the same rent. We thought that would be the market rent. No one came through for weeks, and we had to drop that rent down to $800 per week to attract a tenant. That's going to start happening to more and more landlords, and it's going to start impacting that household cash flow that landlords have, and it's going to help renters afford that home. There's much more balance between rental demand and rental supply. The fourth reason, and this one's really interesting, the construction sector had a home builder grant during COVID, which spurred on a huge supply of construction. We needed activity to occur when there was no activity at all, so the government came in and said, here, construction sector, can you go build homes? This was the home builder grant. Now, what that caused was delays in building homes altogether. These homes are now completing, and there's been much more completions associated with the home builder grant, and that has created more homes available from those completions, and that has added a little bit to supply coming online about now, and that's why rental inflation is coming down a little bit. This is probably a Sydney and New South Wales impact more specifically than other states. Finally, and this is a big reason, the number of investors out there at the moment. We are now back in territory where investors make up a larger share than average. For a 5-year period, we were demonizing property investors so much that property investors went away. The cost of becoming a property investor was going up, getting access to credit was very difficult, and perhaps it just wasn't attractive trading conditions for property investors. And the percentage of loans that went to property investors came crashing down. But now it's up near 40%. In New South Wales, it's 42%. That is much larger than the total number of homes that are available to rent. Typically, this needs to be around 30 to 33%, but now we have more investors than the amount of investment that we typically need on average. So what that means is investors go and buy a home and then put that home on the rental market, creating more competition for rental homes for landlords, and that gives renters more choice, pushing downward pressure on rents. It's probably a big reason why Perth is seeing that big downward trend in that rental inflation, because investors have been running there, and you start seeing that change in the rental market associated with more and more investors kicking in. So those are the 5 reasons that CoreLogic has provided. Putting it all together, we have a little bit of a funny situation here. We got rents coming back down, and it's a little bit of a cautious area. For property investors, if rents start moving negative and move negative in any material sense, it could be an offsetting factor for interest rate cuts. If income starts coming down and expenses start coming down, it could offset the interest rate cut itself and not change property values or property demand associated with those rate cuts. So this change in rents is definitely one to watch, and it's evolving right now. The big story is rents have stopped rising in many capitals, and in the capitals where it hasn't stopped rising, it is nosediving in the pace of rental inflation. This is good news for renters, but a major warning sign for property investors to look into over the year ahead.